Welcome back to Nuclear News, where we get to reap the rewards of understanding the fundamentals of the nuclear energy and uranium spaces and watch as price action slowly but surely starts to reflect what we've been covering for years. Sprott Junior Uranium Miners ETF year to date up 25%. The S&P 500 stock market up 9%. Massive outperformance in the uranium mining stocks. We started talking on this channel heavily about uranium in 2020. Look at the historical assets in US uranium ETFs since 2020. So money is pouring into this space. Price action starting to reflect the booming fundamentals. Goldman Sachs raises Cameco price target to $56 per share. Uranium miners rally again as ban on Russian fuel could shape market for years to come. So the ban on Russian uranium that we've been talking about for months, if not years at this point, is finally here. So what that means is the uranium supply in the West is just going to be more and more constrained and scarce, and therefore more valuable, because it's going to be harder and harder to get. US ban could spark another 60% spike in the price of uranium. And so obviously in the short term, we have major upward price pressure on uranium, which in the West is just going to get scarcer and scarcer. But also ban on Russian uranium helps the US build nuclear fuel capacity. The imports ban would unlock $2.7 billion from previous legislation for building out the domestic uranium industry. So what this means is a lot of the domestic miners that are not producers are going to be fully incentivized to become cash cowing producers. And so very good for the domestic miners, not yet producers, who will become producers and start to generate a huge amount of cash on this very early stage fuel. Remember, we're in the early stages of the mass adoption of nuclear energy as an energy source for humanity, right? It's only been around a few decades. In the grand scheme of humanity, that's not that much. And so we're still in the early stages. We're benefiting from extremely scarce supply. And now we're emerging into a nuclear renaissance. And so miners all around the world get to benefit. But in Wyoming has the resource to replace Russian imports, and we're ready to use it. So the Wyoming miners, like Peninsula Energy, and all the North American miners, Denison, Uranium Energy Corps, Energy Fuels, well positioned to build cash cow businesses out of the valuable fuel that is uranium. We're still in the early stages. AI investment boom extends to nuclear power generation and uranium. Data centers now need a reactor's worth of power, Dominion says. Needs of a new data campus, of which many will be coming, can equal a nuclear plant's output. AI EVs and new factories are driving up U.S. electricity demand. Estimated electricity demand from the tech sector 2022 to 2026 doubling. A doubling in demand for energy. Where is it all going to come from? Uranium. That's what we've been covering for weeks. Wall Street fully starting to understand this. Uranium price follows chip index, not oil price. It's not being priced as an abundant commodity, cyclical commodity. Its price is correlated to the next wave of revolutionary technology that's going to eat the world. Uranium in blue, chip index in green, and oil in brown, right? So not only does uranium have rock solid supply-demand fundamentals, but it's also benefiting from one of the biggest growth industries on the planet, which is artificial intelligence. And so demand is just going to snowball and accelerate. A lot of shuttered nuclear plants could be turned back on, Fed energy official says. Look at all the US nuclear plants. In yellow, we see possible future plants. And then in gray, we see scheduled to be decommissioned. So what happens when these come back online? Uranium demand skyrockets. And so we have natural organic demand of uranium, but then we have a concerted effort to eliminate most other viable fuel options like coal. What does that leave? That leaves nuclear. G7 countries agree to end use of coal power by 2035. So they want to eliminate fossil fuels. What does that mean? Well, look at this chart, which shows diesel generators. So just, again, the long-term picture does not get more bullish for uranium or nuclear. Look at all the diesel generators just waiting to be replaced by small modular reactors. We have Sam Altman of OpenAI and Microsoft explaining why he's helping to take nuclear microreactor company Oklo public via SPAC under the ticker ALCC. And so uranium is now an integral part of the future technology of humanity, but also just the future energy mix of humanity, regardless. Even if you're not bullish on technology, you can't deny the many narratives. And so nuclear power, which again requires uranium, is growing faster than anyone expected. Every single week, this show showcases the massive increase in demand for nuclear and uranium. That's what we're seeing now. Big tech jumping on board. There are very few industries on the planet that have as much capital as big tech. Well, we have big tech titans like Sam Altman investing in small modular reactors because they understand how important uranium and nuclear power is. And at the same time, as we have accelerating nuclear demand and a constricting supply, the Sprott Physical Uranium Trust stacked another 100,000 pounds on Friday, May 3rd, raising another $7.8 million. So Sprott just taking advantage of the tightness in the market, stacking as much as possible. And so we have big tech indirectly squeezing the supply of uranium. We have Wall Street investment vehicles like the Sprott Physical Uranium Trust squeezing the supply of uranium. We have the United States government squeezing the supply of uranium in the West while demand is accelerating. Does not get better than this.